Folks, we're going to get started with our next session, the first one after lunch, so if people will take their seats, we'll go in just a moment. Wow, that's an obedient group. Very good. I'm Steve Leith. For those who don't know me, I am the president of Auburn University, a member of the World Food Prize Council of Advisors, and sit on the World Food Prize Foundation Board of Directors. Delighted to have you with us today as we start the afternoon with Take It to the Agripreneur, Financial Institutions and Capital Investment in Agriculture, where we're going to get to hear from an exciting panel, talk about entrepreneurship, investing in good ideas, and making innovations in agriculture become a reality. I'm going to introduce today's moderator and let him introduce his panel. The moderator today was Dr. Simon Winter, Executive Director of Syngenta Foundation for Sustainable Agriculture. Dr. Winter became director of this Swiss-based Syngenta Foundation in 2017. Prior to that, he was at TechnoServe, and he had recently been Senior Vice President of Development in Washington, D.C., and had previously led their groups in Sub-Saharan Africa. He has a long and distinguished record. And I'm not going to go through all the details, Simon, but I will say he recently joined the steering committee of the Farm to Market Alliance, and earlier career steps included management positions at McKinsey and independent development consultancy, economic planning for the ministry in Botswana, and roles on 3 continents with Barclays Bank. Dr. Winter is a citizen of the UK and holds a PhD in economics. Simon, it's all yours.
Thank you very much. Well, good afternoon, everybody. We have an excellent panel for you, touching the financial sector in many different ways, and we hope we can bring our collective insights to address what remains to be, as we keep hearing, one of the most intractable challenges that we face as we try and develop agriculture and food systems in developing countries. So let me quickly introduce the panel. To my immediate left is Barry Marttin. He has global responsibility for the Food and Agriculture Bank for Rabobank. He also heads up sustainability for Rabo and is also the head of the chair of the Rabo Foundation. And not only that, he also has time to be a farmer as well, and he has a 800-hectare farm in Brazil. So he knows about the system from both sides, which is fantastic. Next to him, we have Ruth Oniang'o. Ruth is not a farmer. Interestingly enough, she said she wouldn't take the risk to be a farmer, but she is a friend of the farmer, and is the chair of the Sasakawa Association for Africa, and was the 2017 African Food Prize laureate. And these days her work is particularly focused on nutrition. And then finally, to her left, we have Geoff Andersen, who is a 23-year veteran of John Deere. He has been a corporate citizenship leader at John Deere for many years, and nowadays is the head of business development for Africa for the company. So as you can hear, we have some very interesting skills that we're bringing to bear. So as you heard from my brief introduction from President Leith, thank you, I have a background that has touched the financial sector in Africa since I first went to Côte d'Ivoire in 1984 with Barclays Bank. And it was that year in Africa that really set my personal interest in helping to deal with poverty challenges in Africa, and my career really has been about that ever since. So as a financier of agricultural exports, in those days I started to learn about this sector, and I've touched it in many ways since. For the last 14 years before I joined the Syngenta Foundation, I was at TechnoServe, and initially the head of their African operations, and then later strategy head. And at TechnoServe, those of you who know a little bit about TechnoServe, it's an implementation organization that really helps to build capacity, capabilities, and business models with entrepreneurial people who want to develop rural-based businesses in the developing world. And a lot of those are in agriculture. And we kept coming up against the constraint about access to finance for these businesses. So we're on the side of the equation, and frankly at Syngenta Foundation, I remain a little bit in that camp. We're on the side of the equation where we're saying, we cannot get capital to good business models. We have great business ideas, great technologies, great entrepreneurs, and we can't have capital. And then on the other hand, you often hear, well, there's plenty of money around. The problem is not a lack of money. So the problem somehow is in the intermediation between those two stories. And hopefully we're going to dig into that a little bit today and how we might unblock some of that. So I think it's also important to realize that when we're talking about financing for agripreneurs and agribusinesses and smallholders, there are many different segments. There are many different segments in terms of the businesses. So a subsistence farmer who's trying to commercialize is a very different kind of business than an aggregator who's trying to source from smallholders or a major input supplier and so on. So each of those businesses has different capital requirements and different credit profiles and risk profiles and so on. So it's not by any way a homogeneous sector. It's actually very fragmented, and that's part of the complexity. The other complexity is the capital types. So it's very different if you need working capital than if you need equity investment or if you need financing for a machine. And again, we'll hear more about different ways of approaching some of these different segments. I would say from my side at the Syngenta Foundation, really we're touching this in two particular ways. One is, we're all about, as President Lee said, we're all about getting innovative technologies into the hands of smallholders so they can become commercially successful, so they can improve their food security, their income, and their resilience. And in order to do that, we need to help them overcome the risk of taking on credit or using their savings to invest in those technologies. And the piece of that we have invested a lot of time in has been around smallholder agricultural insurance. And this is an industry that is really struggling. We just held a global conference on this at Basel at our headquarters about a month ago. And we are coming up with some ideas in partnership with a group called the Initiative for Smallholder Finance that some of you may have heard about, to take that industry forward. It's an industry that has clearly a very important role to play. Clearly there are some interesting projects and some interesting small-scale institutions, but it is very far away from establishing norms and the right kind of mechanisms to scale. And the second thing is, how do we get products and services to those smallholders? So those new technologies, how do we get them into smallholders' hands? And we're working on quite a number of business models, whether it's mechanization services or whether it's inputs or whether it's extension, where we're using digital technologies to create the reduced risk, higher likelihood of success for agripreneurs who want to be offering these technologies and these services to smallholders. And again, those businesses need financing. So we're touching the system, and I'm now going to turn to our colleagues. First of all, I'm going to ask Barry to give us some introductory remarks from his perspective as one of the leading agricultural bankers in the world who's touching this system across the globe, as much in North America as they are in East Africa. Barry.
Well, thank you. Good afternoon. Thank you for all being here. But just before I start, can I just see how many farmers we have in the room? One. Well, not even 10%. So we have more or less 5% of farmers here. Well, welcome. I really appreciate you here. What's the issue? Rabobank, we finance farmers in more than 30 countries right now. We have more than 120 billion euros committed to the region, to this sector. But what we see is that you really have to look at the agripreneur in different ways. If you are a farmer in the US or in Australia or in Europe, in many of those regions, you have no problem getting capital. Okay, if you're a good farmer, you do your thing, you will get your tractor financed. The real thing is, what happens when you get to that middle and the smallholder farmers? So I would like to kind of focus on there because I think that's where actually the 500 million smallholder farmers live or are active. In total, those 500 million, they need something like 450 billion to 500 billion dollars of financing. So 500 million, more or less $1,000 per smallholder farmer. So 2 hectares, a little bit less than that, that's the number, right? So it's what's happening. Why is it that actually, if this big pool of money, opportunity, there's actually only 20% of that being provided. So there is actually a gap, a huge gap of 80%. There's many reasons, but I will come to that. First is that out of those 500 million farmers, actually only 1% is commercially viable. So if you are commercially viable, 10%, one out of 10 is commercially viable. So that means that more or less 10% of that 20% is actually being financed by commercial banks. The other 10% is actually financed by foundations, development banks, et cetera, et cetera. So then what's happening with that 80% and why it's not going on? There are some reasons. The first reason is that it's not the financing. It's actually what is the capital at risk that we want to put forward. The capital rules today say that you need to have between 10 and 12% of capital, risk capital, on your balance sheet to be able to lend. So if we are talking about something like 400 billion that has to be financed still the smallholder farmers, we need 40 billion still in capital today, in today's rules, to be able to provide that. So 40 billion is a lot of money, right? Especially because smallholder farmers is seen as a high risk, opportunity. So on top of that, there has been some rule changes that if you look forward to that, the first rule change that we are having right now on the banking industry is the one related to anti-money laundering, about regulations like Volcker rule that we know here, MiFID in Europe, et cetera, et cetera. Those rules say that if you are financing an organization or you have equity in financing smallholders or other companies, you're actually fully liable for that. So if you imagine an organization that is registered in Europe trying to give a loan out in Africa, where you don't have every structure and everything in place so that you can guarantee and have who is now the ultimate owner. You almost have the issue that you actually don't even have proper documentation. All those things, how are you going to guarantee that the money flow is not maybe going to the wrong? You have to prove it. So there's a lot of issues right now, and I think that's one of the key things that coming out of this discussion here, we should also go out there and have a discussion with regulators. What do we do when a big organization goes to smallholder farmers? The other thing is the Basel IV regulation, because we as a bank are looking forward. Basel IV is going to double the amount of capital banks will have to put forward to finance smallholder farmers, or farmers, and that includes smallholder farmers. So actually, the issue is not 40 billion, the issue is how are we going to get, as a bank industry, 80 billion. The last thing which I will say why the bank industry has been reluctant is because you finance as a bank and you want to have actually finance and you want to have your money back. So that means that if you look at how you finance is how certain are the cash flows and the value chain you are financing. So the risk we are taking is the weakest link in the whole chain. So if the weakest link in the chain is the storage facility, that will break there. Doesn't mean that always the weakest link is on the smallholder side, it's on the whole value chain. So that's where actually the issues are today. But you have to tackle them. They are not impossible to tackle, right? I think that's the important thing is. So because we have been doing as Rabobank a lot of things there. The first thing is that we have joined forces with activities with Norfund and FMO, and we established $1 billion fund to invest in new banks, especially African banks. The idea here is that if we are equity holder of a local bank, so you're not actually now the owner of the whole bank, but partially owner of that bank, you could influence that bank to be a better bank. And once that bank gets better, you can go out there and reach the rural areas. Think about it. If you go to Tanzania, NMB Bank in Tanzania, you invest in that, you make it a strong bank, and by means of making that a strong bank, you could go out there. So I urge everybody to think about how could we think about different ways how to invest. Instead of putting the whole capital as a bank, you put less capital and you just multiply that in the regions. Today, and that's on the middle class, the Rabo Development Bank, so we already are in 12 countries in Africa doing that and are reaching millions of smallholder farmers. The other part that we have to do is to go out there and talk to the new Basel IV rulers saying, look, we actually should, if you do good in the world, if you want to take that risk, you should be able to have a capital relief. No? you don't worry about the bank's capital, right? Because we should get it, right? But bank capital is a very difficult thing. It's one that that's where the regulators have been looking at. So I think that's what we are committed as Rabobank, together with IFC. I don't know if IFC is here in the room. We have been writing to the Basel Committee and to the regulators to give capital relief so that we can give those loans. So there's a lot of things going on. So we have to be very aware of that. So the banks are not doing those investments right now is because there's a lot of uncertainty at this stage. What are the rules on the capital that we are deploying?
Great, thanks, Barry. So we're going to jump to some questions that hopefully will provoke a bit of a conversation between us up here first over the next few minutes, and then we'll open it up and hopefully we'll get some input from some of you as well who have thoughts to contribute and hopefully some questions for our panelists. So the first thing from my perspective, as I was alluding to earlier from my technical perspective, is we need to bring together advisory support, technical tools, and capacity building to enable the finance to flow, to enable these risks to be better understood and better managed and better assessed, to enable the business models to be strengthened so that banks and other capital providers and so on can invest. So question, and let me start with you, Ruth. What do you see as the role of capital capacity building and these other, let's say, infrastructural supports and so on to enable capital to flow better?
Are you asking me?
I'm asking you, Ruth.
Oh, okay.
Yes.
Yeah, let me thank Ambassador Quinn for asking me to be on this panel. And I wasn't sure I would fit here, with this man, but he knew I would have something to say. Look, I like it, take it to the entrepreneur, because Borlaug, his last words we know in Africa is that take it to the farmer. He cared about the smallholder farmer. And we've had in the previous excellent lunchtime presentation by Her Excellency Mercedes that 70% of the world food is supplied by smallholder farmers. We can't wish them away. But I'll tell you, with Sasakawa Africa Association, I've had opportunity to go to about 15 countries. And we see smallholder farmers. They fear banks. They fear banks. They feel like the minute they enter the door, they don't have a tie, they are not well dressed. This is men, and you can imagine the woman won't even look there. And most of those farmers are women. So we were to talk about financing. But you provide financing, women in Africa are trading. These are the traders. Everywhere. They are illiterate, but they can actually count money. So how can we say, they didn't do mathematics, what? But they can count money, they can give you back your change, and these are our farmers. And so the model I'm beginning to hear here, what Rabobank is doing, working with African banks or banks based in Africa, I think the best way is to also socially, strategically, let them understand the customer, understand the unbankable farmer, understand the smallholder farmer, and let them know that they too need resources. Because really, without resources, you cannot make it. So we have in Europe subsidies. Africa, sorry, grow for business. What business? I can't even feed my family. So I'm not here to complain. I'm just offering opportunity, because the farmers are there, they have understood, they know begging is no good. We get aid because we can't help it. When the weather has wiped out all our food, what do? That's all we rely on, so we get food aid. But then when I see, having worked with those farmers, work that Norman Borlaug and his team started for us, what I do in Western Kenya, and our farmers with technology. I'm not a farmer, and I don't want to be a farmer. I saw my grandmother farm. I saw my mother farm. And to tell you the truth, I don't want to farm. They educated me. I came to the US. I'm a professor. so I don't have to farm. But I went back to see and understand their struggles. And I know there are many opportunities amongst us all. A lot. And I say, this technology can work for you. So when we take good seed, we address old African soils, and my farmer with half an acre, my star farmer with half an acre, we put on the plane to South Africa. And the small farmer in South Africa has 50 acres. But my farmer has half an acre. But she's been able to uproot her sugarcane. She's been able to use good seed. She's multiplied her harvest. She's able to send her children to college. She has a good house, and she can even buy a bicycle for her husband. You see, that's what I'm talking about, that it is possible when we understand what those farmers need. But we need the banks, really, to be conscious of who they are helping. We need the banks to know that they can do good. They can reach a lot more people. And then that way we can move together. But making them jump from nothing, to going to get a loan, it is very risky. And the woman I talk about, she said, what will happen to my children? What will happen to me when I die? I won't go to heaven. I have a loan, So we have to understand these issues. So I've been talking with this nice gentleman here, and what we need is partnership, but also to understand. And I know a lot of focus normally is on Africa, but I think smallholder farmers are the same everywhere. They feed us, they need respect, and we need to address them carefully, and we need long-term intervention. Long-term intervention, honestly. And I understood you are there for the long term. And I understand you are there for the long term. And that's why I'm happy being amongst them. Yeah, thank you.
Thank you. So Geoff, you're trying to build a business providing machines to entrepreneurs, agripreneurs, to farmers, to cooperatives, and so on. What's the role of technical assistance and capacity building in helping you grow that business and access the finance?
Yeah, so thank you, Simon. In listening to Ruth, I think all of us in the room who have had the blessed opportunity to work with smallholder farmers out there, actually be in their fields and see the challenges that they have, can really appreciate the passion that she shares, because it's really a unique opportunity to work in this space that we're talking about here today. And I want to thank the team at World Food Prize for allowing me to represent John Deere and share some of my observations and our strategies on the continent. When Ruth said we don't want those smallholders to go away, that's absolutely our view as well at John Deere. But unfortunately, most of those farmers that we think of truly can't afford to purchase mechanization, the kind of equipment that we offer at John Deere. So the solution that we're focused on across the continent of Africa and in other countries as well is around service provision or mechanization service providers. So these are our versions of agripreneurs. Individuals or entrepreneurs, sometimes cooperatives, that can collect the money and be able to put a down payment on the equipment, the services, the training, et cetera. And we provide a kind of a complete package to make it as easy as possible for these businesses to get established and then serve these smallholder bases on a proportional cost for the size of their property. And the great news is that there is an economic model that is sustainable for generations to come. And we're on the cusp of getting this started across the continent of Africa. There are some challenges in getting these models going, though, and that's so supporting these agripreneurs, you need things like training, finance, and these and technology. That as individual companies, we can't afford to make all those investments ourselves. So therein will be a theme I think we'll talk about here later today is partnership. How do we come together as industry players to help support some of those costs? Because if we can collectively bring those things, the finance, the training, the technology that fills that gap between the agripreneur and the smallholder farmer, and do that from a long-term investment standpoint, I think the opportunity with smallholder farmers and feeding themselves, their families, and the growth in the population that's to come is quite achievable. I have an extremely positive outlook in terms of the future.
Thank you. So, Barry, I'm going to come back to you now. So Ruth has made a passionate advocacy pitch to say smallholders can be creditworthy. They can be good customers. They just need a bit of support. They need long-term commitments and so on. Geoff is saying we can do the same with businesses that are working with the smallholders. What about the financial institutions? What capacity building requirements do they need to then be able to engage with these customers? And what's Rabo doing on that side?
Well, thank you, Ruth, for a very nice word. I appreciate. Look, what we are doing is the following. The first thing that you have to do, you have to get organized. And I think that the cooperative model, Rabobank being a cooperative bank, is a very interesting one, right? So that you get organized as a cooperative, because then you can buy jointly a machine, you can have joint loan, your own credit cooperative, because I think that's very important, and you can have your own marketing activities and technology. And the other side is that you have to produce something that somebody wants to buy. So very important is that we change the way. If you look at Rabobank today, through our foundation, we are reaching 5 million smallholder farmers. That every day we are helping them. It's 212 projects we are running today. But the key of those projects to be successful is that every time we go in there, we first try to find a market for the products. The worst thing that you can have is a smallholder farmer producing tomatoes, going along the road trying to sell the tomatoes and actually nobody buying them. And you know that. But what you want is that every tomato gets cash flow, right? So that's what we are trying to do. So we also have now, that's the only thing that works. So today Rabobank is looking at how can we make sure that the bottom of the pyramid gets organized. By means of getting organized, the woman, smallholder farmers, doesn't need to go to the bank to ask, but go to the credit cooperative where she also has a vote. And that's what we are trying to do. And we fund those cooperatives so that they can be successful. And we can set it up. We want to have the machines in a cooperative. So there's somebody doing it, and you, as a farmer, you are part of that cooperative. We want, and we do that, we want the dairy farmers to be owner of their own dairy processing plant. And those are the things that we have to look at. And that, when we make those ownership structures happening, step by step, we build them up, I think then we will empower the smallholder farmer. We will take that 500, actually today 450 million smallholder farmers into the commercial activity so that they can have a normal life. I think that's what should be the commitment. That's the commitment of Rabobank. We want to have partnerships throughout the way of thinking of cooperative, to way of thinking about the whole value chain, that we link them. And then, if you have that value chain, as I was saying, you can actually finance that on a much better way, because then you understand the risks which are there, and then capital will come. So that's actually a point I wanted to make. And what we have to really realize is that to be able to finance smallholder farmers, we have to know that we cannot comply to all Western rules, because they are different. So that's my plea, and that's what I'm doing every day in Brussels and in Washington and New York, trying to understand that doing good should also be rewarded.
Great, thank you. So just building on your points about policy, I want to come back to our other panelists. So from my involvement with Root Capital and the Council for Smallholder Agricultural Finance, which Root has been a part of and Rabo's been a part of, as well as many other institutions that are trying to put capital to work with cooperatives, with these aggregators and small and medium enterprises, that's one of the most difficult and challenging parts of the whole financing system is to get the so-called missing middle served by financial institutions. And there's been a lot of work done recently to say, this is not a sector that can be served anytime soon in a purely commercial way. There is a role for smart subsidies, catalytic finance, blended finance solutions, and so on, to come in and serve this market. So, Ruth, as you engage with policymakers, you're a former politician yourself. How do we get this message about not at the global Basel level that Barry's talking about, but in country for national change in policies that can embrace the use of government policy and so on in a way that can crowd in positive behavior by financial institutions? What are your thoughts about that?
Thank you. I'm still a politician. I'm a former parliamentarian. Yes, yeah.
Excellent.
Yeah.
Thank you for clarifying that.
But just coming back here to cooperatives, actually, if you take Kenya as an example, we had cooperatives at independence, and they were working excellently well. But for some reason, governance became an issue. And so people lost faith in the cooperative movement. But now they are coming back. And I think as they come back, we need capacity building there. And that's why I'm talking about when you come, and you are collaborating with our local banks, you can also bring some of those good ideas, like from Europe, that this is how our cooperatives are run, and they are run long term. So they don't have to collapse. And yes, smallholder farmers by themselves, there's nowhere they can go unless they have a grouping. So we have some of that. There's progress made. It's going on, and of course, we need also to train the farmers to understand what banking is. Because some, up to now, still keep their little monies in their households. Yeah, so that is important. Now, policy making. We have great policies, by the way. We are not short of policies. We even write policies in better English than yourselves. They exist. They are nice. Borrowed from here and, cut and paste from here, and some we actually think, and we have great policies. The problem is in the implementation. Implementing. So the policy environment is great. And so, many times I come here and I tell people, come to Kenya, come to my village, come to Africa. And of late, since I was here 2 years ago, I've had some arrive in my village, and it's very good. But policies are very important. And I know we have policies which say, banks, can you open up space for farmers, for agriculture? And they do. But sometimes when I check, their interest rates are higher than what they should be. So we need to think of that farmer. Why should we get a farmer to pay 20% interest rate on some small loan of $1,050, right, on $50? Why should we do that? So we need different products. And I know you are Rabobank. I'm looking at you. I think this Rabobank can do this. Have a special package. Have a special package, really, for smallholder farmers. And you say you are focused on them. But also, I saw this. John Deere, you don't have this, These are nice, small. From University of Missouri, I got Kerry Clark showed me this. I said, gee, our young farmers, even the women farmers, would love to drive that small tractor. It's so sexy looking, But when it is made in country, it's actually affordable. And when you have them together as a cooperative or as a group, we work with the groups, they can come together, they buy one, and actually it is now able to farm, each small farm. So yes, policies many times actually exist, and you can work on them to exist. That's not a problem at all. But the implementation now, we have to have the commitment. So I like this DG spirit that we have to work in collaboration with each other. And it doesn't matter where you are. You have to have an African partner that you can trust. It's all based on trust. And then you have others who have things that they can offer. And you have to be committed, like you said, committed to doing good. Not just doing business, but also doing good. Yes.
So let me jump to my last. Thank you, Ruth. Let me jump to my last question to the panelists, so that we still have a bit of time for your questions. And Ruth, I mean, yes, I agree with you. There are policies, but some policies are better than others. And in Kenya, I think the recent experience with the interest rate cap was perhaps a policy that was a little too blunt. So it wasn't just execution. It was also having more intelligence, let's say, in the sophistication about how that policy gets applied to different segments. Again, back to my earlier point, and I know that's under review now, and hopefully we're moving into a more productive space. How to get those policies to be smarter, to be more nuanced, to be tailored to the needs of specific segments and so on, comes back, I think, to the question about partnerships. Bringing different stakeholders together to take a close look at these things and not just have the government say, well, we're going to mandate something, or the private sector say, well, we're just involved in our own profitable part of the ecosystem and we don't worry about the rest. So I'd love each of you to talk about what do you see as the potential for multi-stakeholder partnerships to come together? And Barry, let's come back to you. Syngenta and Rabobank are both participants in the Farm to Market Alliance. That is one of these platforms. It's still not working as well as it should, although it's achieved a lot of progress. I think it has enormous promise, and I think we need to stick with that one and really make it work well. But what's your take on this, Barry?
Well, my take on the Farm to Market Alliance is that it's really bringing all the parties and partnerships together, and not only companies, but also the private and public sector, working together with cooperative and smallholder farmers. And always with that philosophy, let's look at the whole value chain. And how can we make sure that that value chain doubles the productivity at the smallholder farms, but at the same time, you have a buyer at the other side. So what we have been looking at is, first, before we set up the value chain, we first have somebody who wants to buy. One example, the World Food Program buys 10 million tons every year. So why don't part of that program could not be purchased from smallholder farmers in the whole value chain? Then you go step by step in the value chain and you look, what do you need? Well, you need fertilizer, you need seeds, you need transportation, you need insurance, you need equipment, and you build up step by step of those things, and you create that value chain. And suddenly you have a value chain which is very financeable, because every part of that is understood, is modeled, the cash flows flow on the right way, and they actually reach the one that started, which is a smallholder farmer, which is usually the one that sees the fuse of the money in that whole value chain. And most important, we ask that every party in that value chain also takes risks. So there is also losses that you could have if it doesn't work. So that's the only way it works, is really establish those value chains. And then establish also value chains in country. Think about poultry value chains, where you have the smallholders, you have the processing, you have the cold storage until it gets to the supermarket. And that's why we also invest in local banks, because to be able to finance those value chains, you also need local currency. And you need to have good local banks that can generate that currency, have credit officers that can do the credit approvals, et cetera, and don't think, oh, it's very risky, and that's why it's 20%. The moment that you understand the value and the risk of that value chain, you can do the proper pricing. So those partnerships are the only ones that are going to make that we go from the currently totally inefficient financing for the smallholder farmers to actually fill that bucket. Because now we know of those 70% of our food is going to come from the smallholder farmers. And if we don't solve this problem, it's going to be our problem.
So we've had this panel talk a lot about sub-Saharan Africa. John Deere, of course, is a global company, as is Rabo. Geoff, thinking about lessons from elsewhere and how to build effective partnerships, what's your take on this?
Yeah, thank you, Simon. I'll answer that in just a second. But I do have to respond to Ruth's comment about, the sexy woman farmer on that tractor. You know what they say about green? I really think a lady on a green tractor is very sexy. So. But Simon, this question around partnerships and so forth, I think really gets to the heart of the soapbox that I get on at John Deere, and that is, companies like ours, NGOs like TechnoServe and others, governments, have all proven that there are, financially, economic, sustainable models on the continent. But we do that in small scale, in pilots, and we put those numbers in our reports, and we're all pleased with the results and so forth, and then we step back and we look, how do we scale that up? And I just think there's, it's incumbent upon us to come together. We can make our investments in our business, and we have dealers on the continent of Africa that are big companies, and we did that specifically. Companies like Tata and Afgri and Lawn Agro, who are there for the long-term commitment, companies with big, deep pockets so that they can support these smallholder farmers. But there are just things that collectively we will get so much further down the road if we can come together as companies, NGOs, and governments. And it's, areas like I mentioned earlier, training. It's absolutely essential, and we're going to be a lot more successful if we do that collectively. Finance. And I think there is a role for government in finance, but I think that role is limited to providing, loan loss guarantees, being a backstop to give the commercial bankers the confidence to loan to this sector. So I think there's partnerships to be had there for sure, public and private. And then in the technology area, and you and I have had discussions, you're working with the technology business that's focused in this Agripreneur sector. We're working with a company, Hello Tractor, who supports that contracting business. Let's make sure we do that smartly and as much as possible together so that we're not duplicating and replicating investments unnecessarily. So. I just think there's a huge opportunity there, and I really challenge us collectively to come together quickly and start pooling our investments and our talents and our projects for everybody's benefit.
So just building on that point, some of you were at a breakfast that I participated in this morning on scaling up agricultural technologies and agricultural solutions for smallholders. And there's a lot of emphasis now, I think, by public sector organizations, in particular funding organizations, as well as private sector companies and so on getting away from the project cycle and getting really towards these platforms that are not just going to run smarter projects, but are going to really foster system change at a large scale to benefit the 500 million or whatever that number is these days, smallholders that really need these kinds of support. Ruth, coming back then to the farmer perspective on this, often when we're in the space of talking about public-private partnerships or multi-stakeholder initiatives, we're thinking about businesses, we're thinking about NGOs, but often they're international NGOs, and we're thinking about governments and so on. But the farmers at the end of the day, as you very eloquently said, are the customers of all of this. They are the beneficiaries if these things work. How do we get farmer voice into these partnerships?
Look, most of the farmers, smallholder, I work with, I know of across Africa, have half an acre to 2 acres of land. It's very tiny. Many of them cannot read or write, who have those small plots. They are voiceless. Nobody knows they exist. And so that's why we say people like me and others who understand what's going on globally and what can be brought down locally. There are a lot of technologies, and especially with now the mobile phone, the internet. If you take Kenya, we have 80% penetration, where in Ethiopia is increasing, I think it's 60% penetration. They have this thing, even if they can't read what is there. It empowers them. But there's a lot you can do with that. So the farmer, or whatever we do, all of us here, we have the farmer in mind, right? Norman Borlaug said, take it to the farmer. He died thinking of the farmer. But what do we really do with the farmer? Just like Geoff said, do we just write nice reports 3 years and we're out? Yeah? Oh, yes, nice reports, show some farmer, nice women, and you get your grant. When I hear there's a lot of money committed, it's going to help smallholder farmers, it's going to Africa. I go back to my village, I go back to my communities, I don't see a single difference. I don't see a change. So we take one entrepreneur, one farmer who has done well, and we, use them like a star. This is what we have done. But really, I think we can do more, and I believe, Simon, there's a lot of money around. And for the young people who are here, I now have young people coming to the village. They come out completely transformed. But they also transform the village. Yeah. You have people all of a sudden happy. We matter. We are valued. I can do a lot for myself. So bringing the smallholder farmer to the international arena is not carrying that woman to bring her to Des Moines. She can't survive the trip. She'll go back and won't find the husband will be gone, right? So we need a number of us to be advocates for the smallholder farmer, to understand what they're all about. And it's better even when it doesn't have to be me born there. It can be anyone else. We have many people here who are working in difficult situations, who know more about Africa than I do. They're in Cambodia, in Yemen, they're where? I had one yesterday. It's amazing. So we can be advocates for the smallholder farmer. And I would like, God willing, if I come back, when I come back next year, I'll be approached by people who say, I went down there and this is what I found. And this is the change I was able to effect. It's not just about money. It's about having a presence as well and showing that we care.
Great, thank you.
Yes.
Let's have... We're almost out of time, but let's take time just for 3 questions. And if you can ask it just of one panelist, so much the better, because then we can have 3 short answers. But we'd love to get a little bit of voice from you. And we're going to start over on the left. Please introduce yourself and please point your question.
My name is George Cummins. I'm a retired extension agronomist and a farmer, an educator. I'd like to ask Ruth to share 3 successful programs in Kenya and Africa. The first would be like the Kagatswani community development model. I would call it a self-financing credit union among the women's group. Janet Mumo, Sharon Munyayo. That would be the 1 Acre Fund and Sasakawa that are package programs that include finance, insurance, marketing.
Thank you. Ruth, just very, very quickly, three of your favorite examples.
Yes, Africa is about projects. It's not for lack of money. It's a lot of money that has gone to that continent. A lot. Many projects I'm not even aware of. But I'm here. It's like a puzzle with the different pieces scattered all over the place. How do we bring them together? Great work going on. Just by here, there. But we still see hungry children. We still see hunger, women, poor, poverty all over. Pedro, that. It's all over. But it's like a puzzle with pieces scattered all over. How do we bring them together so we can begin to see impact? How do we avoid duplication? How do we collaborate? There's a lot of opportunity for that.
Okay, thank you. Question over here, please.
My name is James Fairchild. I'm part of the Global Youth Institute. And my question is, what role does microloans play in smallholding farmers?
So your question is about how do microloans help smallholder farmers?
Yeah. Yes.
Yep. Okay. Barry, do you want to take that one?
They are key. I mean, let's be very sure. Look, the The good thing is that the reality is that if you look at our statistics as bank, is that actually if you give microloans through cooperative credit unions, actually the default rate is almost zero, right? And because you have to be well organized, so I think there is no crop without cash. Can I just put it up? Let's make sure. If you cannot finance your crop at the right moment, then when you have to buy the seeds or you have to buy the fertilizers or you have to buy food so that you can wait until you have to market your crop, it's not going to be successful. You will remain on the, let's say, on the 2 tons per hectare instead of going to the 5 or 6 tons. So microloans is actually the lifeblood of being able to produce food.
And I would just add to that loans on their own typically don't work. They have to come with a package of other things. We just heard about the 1 Acre Fund as one such solution, where it's a package, and the loan is at the heart of the package, but you need the rest of the package. So, over here, last question. Thank you.
Bill Crabtree from the Global Farmer Network. My question's to Mr. Andersen. I didn't see your sexy John Deere green machine. I'd like to see you hold up a photo that was a similar cost, maybe a different colour. Do you have such a machine, and is it made in Africa?
Thank you for the question. We do not have machine forms like what Ruth shared, and we've looked at that a number of times and decided it's not the right machine for John Deere necessarily. But we certainly see the value in that machine form, and until we have zero hungry people in this world, every solution is a good one. So, but that's not one that we are invested in or plan to invest in.
Thank you. I'm afraid that's all we have time for. I'm just going to share a couple of my own takeaways from this very interesting discussion. I think, first of all, we have to have the farmer at the center. The farmer is the ultimate customer, and whether the loan is going to a cooperative or the loan is going to an agripreneur who's working with the farmer, if we're not serving farmer needs, we're not really solving the problems that we're all here trying to solve. So I think for me, Ruth, your passion and your devotion to this cause is very admirable, and thank you for bringing that to the table. I think, to Geoff's points, we need good business models, however. We need good business models that can get the innovations, whether they're machines, whether they're irrigation, whether they're seeds, whether they're crop protection and fertilizers. We need good business models, and we need good entrepreneurs and good businesses behind those business models, and they have their financing requirements, and they can become channels for the financing. And then to Barry's points, we need the financial institutions to come to the table, but they can't come to the table on their own. They have to come to the table through partnerships. They have to come to the table through better regulatory environments that really are enabling the causes that we're trying to pursue to be solved, and not just to satisfy maybe folks in Basel, where I'm based, or in the financial capitals of London and New York and Singapore and so on. So I hope you've all learned something. I'm going to take the moderator's prerogative and just for one moment wave something else at you, and that is a book that we just put out as Syngenta Foundation in partnership with the Indian Center for International Economic Research, and it's about supporting Indian farms the smart way. This book is not available in the United States yet, except at this venue. And it is upstairs on a table on the 3rd floor. Those of you who want to understand how policy can enable finance to flow, enable technologies to flow, building off Indian examples, might want to go and grab a copy. It's available for free today, and if you're going to India, you can buy it.
How many have you there?
We have about 25 copies upstairs, so run upstairs, go grab a copy. Thank you all for joining us for this discussion. Thank you very much to my fellow panelists, and we'll look forward to the rest of the afternoon.
Thank you. Yeah. Whoa, great job. So